What's the balance of risk here? We know that here in Australia, for example, that sort of wage price spiral is not quite the same that we see across other major economies. So what's the dynamic that you're watching?
Well, the wage price spiral may not be as great as it is in other developed economies around the world, but it is beginning to appear a little bit in Australia. But we are looking at both core inflation and food inflation and keeping a very close eye on that. I think for much of the region, food inflation is a real strong concern. It's in most cases stronger than top-line inflation, and this is one factor that will keep central banks on high alert going forward.
In terms of the data dump this week, what's key for you? Of course, closely watching China. Is there a little bit more of a better prospect of a meaningful recovery in the transmission of monetary and fiscal stimulus now that we're seeing a lifting of the COVID-0 restrictions across some of these cities?
Yeah, I think there is a chance. The policy stimulus should become effective pretty quickly. Although the impact of all of the policy stimulus plus any opening up of the Shanghai economy may not really be evident until data starts coming out for the June month, and that'll be a month away. We're just getting May data right now for trade, for example, and it actually may show a little bit of weakness because of the impact of the shutdowns in Shanghai. So the May data on China isn't going to be so conclusive. We'll be watching some of the other countries that have data coming out this month for industrial production and for trade. Places like Malaysia, Philippines, Taiwan will be getting reads on industrial production or trade. And those will give us a good idea of whether that aspect of the economy still continues to bolster the Asia-Pacific region. Trade has been so important, as you know, really ever since COVID. It's been the one positive factor all along and continues to bolster the region.
Which has also really led to more soaring inflation around the world as well, including in Asia, where it seems finally prices are now catching up and really continuing to accelerate. When you look at those price pressures and when you're seeing also some of these economies across Asia now implement some food protectionist measures, really limiting those exports of chicken, cooking oil and grains, how is this going to really be factored into the inflationary picture in the region?
Yeah, this will be very, very important, actually, in terms of driving inflation forward over the next few months. I really do think that food inflation will be very high on the watch list of central banks because, at least in the developing economies of East Asia, food accounts for a higher share of the consumer's purchasing basket and will have a real strong impact on household budgets going forward. So central banks will be watching that very carefully and factoring that into their policy. And is one reason why most central banks are already on the way to normalizing monetary policy. That will continue to be the case going forward through the coming months.
India, of course, very sensitive to food inflation. What are we expecting from the RBI this week?
Yeah, India, amongst the larger economies of Asia, India has the highest inflation rate, and it's due both to internal constraints plus external supply constraints as well. So we do expect that there'll be a 40 basis point rate hike from the central bank in India this week. I think there's no way they can avoid that, and probably going forward, a few more rate hikes through the course of the year.
Steve, across a number of major markets, we're seeing extremely tight labour markets, including here in Australia. But anecdotally, the skills shortage, just the labour shortage and the distortions coming out of the pandemic are becoming really problematic for businesses. Do you see this being alleviated, given that we have seen borders, for example, reopen for a while now?
The opening of borders is going to help. So many countries around the region rely on migrant labor. It's been a little bit easier for business travel and tourist travel in much of the region, a little less easy for migrant labor, but I think that will begin picking up in the second half of the year. And this will be important. It'll be important for the construction industry. It'll be important for travel and tourism and for a number of services around the region. It will help normalize labor markets in the coming months.
Steve, let me just ask you about Japan, because of course it seems that we are now starting to feel, even across Asian economies, that the surge in inflation is not temporary. Why does the BOJ still stick to its easing policy? What is different about the Japanese economy?
And the Japanese economy is on its own in terms of its monetary policy. And frankly, I don't expect much change soon going forward. The inflation is beginning to tick up a little bit in Japan, but it's still the lowest across the region. I think, what the central bank is worried about in Japan is that consumer spending is very weak. Consumer confidence is not strong at all in Japan. And the government still has not eased up on all of the restrictions related to COVID-19. There are a little bit of easing up in terms of entry into Japan of both business arrivals and tourist arrivals, but it's not complete by any means. And so there's really nothing to suggest in Japan that inflation actually is going to get a whole lot worse in the very near term, or that the economy is set to accelerate in the near term.